the way I'm coming at it from is UX is the most important thing. And I think it's all too common that protocols just kind of shoehorn a token or something like that into a protocol that just doesn't need to exist, essentially. Basically, my grand vision for how to build this thing is you have a wallet straight away built into the app, and you can obviously take it to other apps as well. We'd have a decentralized on-ramp in there so people could kind of just bridge funds straight away, and then you should be able to sign for transactions and kind of have the gas fee abstract in the background. Like a few different unlocks that if we can kind of nail those, I think that's going to be a massive boost in terms of UX and actually getting people to use Onchain, which I think is a massive blocker right now.
This episode is brought to you by Helium Mobile. They've created a crypto-native phone plan for unlimited talk, text, and data for just $20 a month. We'll chat more about them later in the show. Before we get moving on to today's episode, just a quick disclaimer. The views expressed on this podcast by either myself, my co-host, or any guests are their personal views and do not represent the views of any associated organization. Nothing in the episode should be construed or relied upon as financial, technical, tax, legal, or any other advice. Okay, let's jump into the episode. All right, everyone, welcome back to another episode of Lightspeed. Joined today by Tristan, one of the co-founders of Zeta Markets, a perp dex on Solana. And you guys have been shipping recently. Tons of great, exciting news. We got a token generation event around the corner. We have what will likely be the first Solana L2 in the discussion. So first of all, thanks a ton for coming on, Tristan. This is going to be a really fun discussion. I think I kind of want to start just getting a high-level overview of, you guys have been building on Solana for a while. Just walk us through your life cycle and how we ultimately got to this moment with all this abundant great news to talk about.
Yeah, absolutely. So I think last time I was on Lightspeed was close to a year ago, very kind of different set of circumstances. But, we have been building for quite a long time on Solana. To be precise, I think early 2021, February, I think was when we got started. And there was really nothing on Solana. People kind of tell you back in the day it was just Serum and Radium, and there was really nothing else. It was pretty painful to build on the tool chain, and everything was just very raw and unfiltered. And that's kind of what I think excited us the most is like, hey, it's a new chain. It's kind of green pastures. There's cool stuff to build here. Everyone's a hardware systems maxi, which was kind of cool. And selfishly, I really wanted to get into learning Rust, coming from more of like a embedded systems background. I did like robotics and that kind of stuff. So it was kind of my jam. And I got really excited by, the parallelism and hardware improvements that we saw on the Solana side. And for us, we really wanted to build something that was all around high performance, low latency, DeFi. And that's always been at the core of our kind of mission. So we started, I guess, in the very early days, building out a prototype on Ethereum. We wanted to build an options exchange. That was kind of fascinating to us. And we were wondering, why has kind of perps and futures taken off so hard and options are kind of really kind of haven't matched despite being massive in traditional markets. We did that for probably a good 2 years almost, and then ended up kind of pivoting to the perp side for a number of different reasons. I think mostly from the product market fit side. It's just like the demand for options really hasn't kind of taken off so much in crypto generally, even on the centralized side, let alone the decentralized side. And it's just like a very complicated product to build, especially with DeFi, the constraints. We've just got like spot markets and lending markets really taking off. And, we're probably like 3, 4, 5 steps away from getting into like extremely complex derivatives there. And so, yeah, we've been shipping a lot of stuff. We went to mainnet kind of early 2022, came out with that product. And then I guess basically over the bear market, when things cooled down, we just looked at what we had and we're like, we can improve this a lot more. Let's rewrite all the smart contract, all the front end. Let's just like look at what is the latest and greatest on the RPC side. How can we make this thing as fast as possible? And now the exchange is really, our core thesis is actually kind of the kind of name of the podcast is building, finance at Lightspeed. That's what we have on our kind of landing page as well, where we're all about, building things as fast as possible. And so that's what we've done. We build a fully on-chain order book perps exchange, all built on Solana. We stream basically the order book around the world at the speed of light. You're basically grabbing information and slots from the validator before they're kind of even generally available. We kind of use the Geyser protocol to grab stuff within like under 400 milliseconds, so like intra block. And you see this actually very fast updating order book on the UI, which is pretty cool. And so you're starting to get towards something that is like a globally synchronized state machine and kind of like the fastest, decentralized order book that you can build. And that was basically what we've been doing for the last 3 years. And I'm pretty proud of that, and we still have a long way to go.
Love that. That just gets me fired up listening to that intro, man. Congrats on all the success you've been having. And when we think about sort of what's the next chapter, you recently announced Zeta X, which is the L2. So talk to us a bit about the core driving thesis of why it made sense to kind of go pioneer this direction. And then we'll kind of get into some of the more technical side there as well.
Yeah, that's a good question. So I think from a high level, what we've built so far, I'm definitely pretty impressed with it. Like we've done $10 billion of trading volume on chain. Like if you would have told me this a year or two ago, I would have been pretty mind boggled, but it's really cool to see how far it's come. And everything runs on a smart contract, all the logic, the order book, matching engine margining system, liquidations, everything is permissionless, runs on an order book on chain and a smart contract, which if you're coming from like Ethereum land or anywhere else, I think would just be like completely infeasible. So it was pretty neat that we were able to build that. And likewise, we talked about this just before the podcast, but like all the market making is done on chain. We have this kind of market making stack and work with market makers and do it all on chain, which is kind of cool. And the reason why we went down this route initially is because I had this chat with Tolly in the very early days, and his big thesis was like, can we bring the NASDAQ on chain and can we build something like that? So that was always our core driving thing. And so we kind of executed on that, and I would say works pretty well for like a decentralized protocol. It's about as fast as we can make it. We've been optimizing the hell out of it, and you get basically come in there, trade on the front end, send trades within 400 milliseconds. It's pretty fast. I think for like average end user, it kind of fits the job. But now we're kind of running up, I guess, against like the state of the art or close to, and we're kind of looking ahead and how do we scale? How do we make things even better? Especially through like a UX and performance lens, which is what we care a lot about. And so who are we trying to take on now? Like, is it these other DeFi protocols and, GMXs of the world and these kind of peer-to-pool models? Or is it like the Binances and Bybits of the world who actually do like 99% of all perps market share? And it's probably the latter now. And so that kind of what drove us towards this kind of L2 direction. We thought, how can we max out the performance? How can we have a bit more of a say on the infrastructure layer, which is just kind of been the real difficulty for us. Like Solana opens up the design space a lot, but when you're trying to push things even further and get very specific with your like niche use case, there are things in the runtime with like how many accounts you can pass in, which kind of limit how many markets we can margin together in like a cross margin system. There's stuff like, hey, we want really fast order placement because that's what all centralized exchanges have. That's what allows extremely tight prices and price discovery to happen. It lets us obviously, take on more risks and liquidate positions faster. When you have to deal with on-chain congestion where people can't cancel orders and liquidations aren't happening and things take like an order of magnitude faster than a centralized system, then you start running into some slight difficulties. You get a bunch of people complaining in your Telegram group saying, hey, my stop loss didn't trigger because, the block space is kind of saturated and all these kind of things that were very hard for us to control. And I kind of felt powerless. I'm talking to my engineers and they're like, man, we just can't launch stuff on the chain or we can't get transactions through because Solana 1.18 hasn't rolled out. The fee markets are unpredictable. So things are definitely improving and I'm very bullish for a world. Like some people see me going down this L2 route and they're like, oh, this is Solana Maxi invalidating the kind of monolithic thesis. I'm like, that's absolutely not right. I'm very much a believer on what's happening. And I think that's the cool thing is we're leveraging and taking a part of like both roadmaps, like from the monolithic side, all the fired answer stuff and all the scalability that's happening and the local fee markets, that all benefits us, which is great. But then on the ZK side, on like the rollout technology side, that's something we get to kind of leverage as well. So there's a long-winded way of coming towards like, how do we build just like the best exchange app chain? And so we figured using Solana is where we think a lot of the DeFi activity and TVL will kind of end up pooling. We're a big long-term believer on Solana. And the nice thing for us is like, or the thing that's important to us is like, can we somewhat take this execution component off chain, but still use the safety, the economic security and like the consensus layer of Solana and not have to bootstrap, I guess, our own validator set, which is extremely expensive and a bit of a pain. And so that's what we're trying to build with this rollup is it's going to be an L2 on Solana. We're going to have this basically very fast ZKVM matching engine that's going to run off chain. Every computation that happens there, basically like every order placement, every trade fill, all these things will kind of run through risk zero or like a similar prover. We'll have a ZK proof for that. That can obviously be kind of proved on chain, and you get this very fast performance, and you get these more importantly these sequencer soft commitments, which is really nice. So users will basically know what happened to their trade or have a good realization of that within milliseconds as opposed to half a second. And we get that kind of scalability, throughput, low latency, but then we leverage, I guess, Solana still is that DA layer. So that's a long-winded way of saying we're trying to build something that is like a centralized exchange competitor, get the best of both worlds, the security of a really well-known, battle-tested, trusted chain like Solana, but then have basically centralized exchange performance. And that, to me, that's like the best of both worlds.
Decentralized physical infrastructure networks are a massive point of emphasis in the crypto industry today, and Helium Mobile is a fantastic example of a business that is leveraging this distribution approach. Like any network, there's a supply and a demand side. So the supply comes from hotspot deployers, while the demand comes from phone plan subscribers. Together, they create and power a decentralized wireless network that provides expanded connectivity and amazingly priced phone plans. But let's zoom in on how it works for deployers. So you get this device and you set up this hotspot, and anytime a Helium Mobile phone user is near your device, they will send and receive data through the internet using your device instead of their cellular network. The cool thing here is that you earn mobile token rewards for providing this service based on the amount of data routed by your device and how much coverage you're creating. There's also what are called boosted location, which are directing rewards to the targeted areas that actually help individuals and businesses deploy these devices in the proper areas where coverage is actually needed based on where subscribers are. Currently, that's in LA and Miami, but soon to be coming to New York City. Again, by creating coverage, you're helping build a better network together while earning mobile token rewards. If providing the service is something that's up your alley, head over to hellohelium.com/hotspot to get 15% off your indoor or outdoor Helium mobile hotspot using the code Lightspeed Hotspot. That is all caps, no space, Lightspeed Hotspot. And we'll be sure to put that link in the show notes. Yeah, that's really interesting to hear. And that was kind of like what my inclination was, you know, that period of congestion was brutal on Solana. It limited a lot of things. And I feel like fully on-chain order books are probably the most affected there because everything affects the end user, but you guys have this like additional piece of the puzzle being the market makers, and they need to A, place and B, cancel orders. Can you talk a bit about maybe the challenges of being a market maker in a fully on-chain environment relative to that of like a Binance?
Yeah, I'm not going to lie, it's pretty hard. And I've written some bots myself, so I kind of know the pain firsthand. And I worked with all our market makers. So it's definitely not easy. It requires quite a bit of sophistication. And some stuff is pretty tough. So having worked with, I guess, people who come from centralized exchange market making, there is a big step up in terms of learning curve. So not only do you not deal with like a centralized REST API, which is like very standardized, you ping it and you're like, hey, I want to place an order, and it gets back to you in a few milliseconds, like, yep, executed, all good. So you're instead talking to, you know, an RPC, say a Helios or something or other. You send it to that thing, and then you got to wait for an acknowledgement. It usually takes, you know, a couple of hundred milliseconds. And then if you were like pre 1.18, the thing might just get lost in the ether somewhere. So you just have no confirmation. So some of our market makers are like, hey, I sent this order and it just disappeared and it just like never landed. And I'm like, this is what we're dealing with right now. Thankfully, that's kind of a lot better. But there's all these kind of weird inconsistencies there that make it a lot harder. There's also stuff like chances of rollbacks. Obviously, it's a decentralized system. People have got to do this fork choice voting stuff, and the block that you listen to on like a process commitment or potentially even a confirmed commitment, there's not a 100% chance that it goes through. Like some things will have potential rollbacks, and you kind of got to deal with that. Whereas in a centralized system, it's basically impossible to happen. You're just talking to one AWS box somewhere, pretty reliable. So that's one thing, is just like the interface, the connectivity, and dealing with the decentralized system makes life a lot harder. And I guess for the market maker, you got to juggle this kind of infrastructure piece with a lot more kind of complexity. Another thing is like there is a cost to market making now, as opposed to just hitting centralized API, which is just a network request. Now, to place an order, you actually have to pay gas fees. On Solana, it is pretty damn cheap. But it actually racks up. Like some of our market makers are probably sending millions of transactions a week. And so when you kind of look at that cost and you sum it up over weeks and months, like they're probably paying thousands of dollars in Solana gas fees, which is, I mean, it's not crazy, but it's not nothing. And that's definitely a barrier to entry to some people. And it's a cost. So thankfully with the L2, we can kind of do a lot of this stuff to abstract away gas costs and make it a lot more efficient there. So I think that's definitely a win for some kind of upstart market makers. The The other thing, like I mentioned, is just like latency. Getting your kind of confirmations on trades within milliseconds is really nice, because it means you can actually quote extremely tightly and have confidence in that. That's a slight challenge with on-chain order books, because you might place orders and you're kind of basically showing your hand, essentially like, here's the quote. I think Solana is going to be $100 and I'm going to quote it like 1 basis point wide. I'm extremely confident on that. The problem is, if suddenly the price moves very quickly and I want to go and cancel or replace my order, but there's some kind of congestion event, or I get front run, or for some reason my like transaction doesn't get in there, then I end up just having this resting limit order and I get picked off for massive size. I lose a bunch of money. Market makers definitely complain when there's congestion. They're like, I can't cancel my orders, and I basically end up losing a lot of money. And so as a result, these guys end up having to quote, a lot wider. Maybe it's like, 10, 20 basis points or something or other. So, we definitely struggle to have as competitive liquidity as a centralized exchange. But, people view it different ways. I think the ellipsis guys are like very much like, that's, if you want a decentralized system, that it's going to be naturally kind of wider spreads. But hopefully, I'm hoping that more of this kind of centralized finance goes on chain and we have more price discovery on chain. So getting it faster and I guess making some of these compromises to me is important.
I think the customization factor is probably the biggest push for your own environment as a developer. Like that's kind of what it seems to me. What do you think the long-term vision is for general purpose chains then? Because, wouldn't every app eventually kind of hit this scaling point where you're like, all right, I've achieved what my initial set of goals were. Now I need to push this further. And the best way for me to do that is like in this app specific environment. If that's the case, then yeah, like what's the vision for the base layer in your mind?
That's a really good question. Probably slightly above my pay grade, but I'll have a good stab at it. I don't fully agree with the kind of Cosmos thing that it's like, or what Bankless are pushing, where it's like tens of thousands of apps and roll-ups and you got to bridge all between them. That just sounds like awful UX. And I don't think I want to live in that world where I have to bridge between every application. Like I'm just not a huge fan of that. I think there is probably like a medium there. And I think what we're kind of looking at, so we're leveraging kind of sovereign SDK for a lot of our stuff. And what they've explained to us is once you have a shared DA layer, the nice thing is that you actually get quite strong composability guarantees between rollups that kind of use the same DA layer. So that's the nice thing. I think we have like asynchronous composability. If someone else was to build a rollup on Solana, use that as the DA layer, I think based on the kind of ZK proofs that we'd be able to generate and kind of looking at the state of the DA layer on the other rollup, we would be able to bridge basically seamlessly, almost instantly, and kind of compose with other apps doing stuff like that. So I think there's quite an interesting future, especially in the ZK world where things can be kind of proven and done basically real time. I guess if proving costs and stuff come down a bunch, that things will be kind of quite composable and trying to move away from this kind of super fragmented app chain vision, which I definitely don't want to go down.
Yeah, no, that makes sense. The sovereign team is phenomenal. So that's exciting to hear you're working alongside them as well in this endeavor. And one of the other things in Ethereum land that's really popular right now, or the idea is being much discussed, is like the idea of a base sequencer, or where the L1 actually sequences the blocks on the L2. This kind of gives you like a sort of like an out of the box decentralized sequencer, basically. And you do get some stronger composability guarantees as well in this model. Have you guys considered that route at all? Or do you think you got one more piece on that, I guess, is like, because if you don't go that route, there are clear advantages to having a centralized, single sequencer, I should say.
Yeah, it's a good question. This is also like, I think, an active area of debate. I've seen like Justin Drake obviously pushing this. It's a big conversation. And I think Ethereum land, there's a lot of kind of jargon being thrown around. I wouldn't say I'm like the definitive expert, but my read on it is it seems like that's kind of a very nice solution if we can figure out how to make it work. Because there are definitely some trade-offs with centralized sequences. Obviously, optimism, Arbitrum use it. The issue is obviously this sequencer has a lot of power to censor transactions. Yes, you can get around it. You can use this basically inbox model that they have where you can send stuff directly to the base layer and you can kind of like circumvent. But it still has a lot of power. People are trying to build decentralized sequences like Espresso and a bunch of other protocols. They seem pretty complicated and I haven't got my head fully around how they work. So the base sequencer idea is definitely elegant. It's something that I wanted to explore initially, but I don't think anyone's like fully solved it or come up with like a really, really compelling solution. That being said, I think the nice thing that we get with the sequencer model that we will have is, and what we've been pushing for and why I'm really excited about this kind of setup is having that sequencer means that you get these pre-confirmations, essentially, these very fast sequencer confirmations. So that's what I was talking about when this thing is kind of running this rollup, but people can directly communicate or get these confirmations from the sequencer. I basically go connect to my front end on Zeta. I set up a session key or whatever to trade on the exchange, which is nice. So I don't have to re-sign. And then I can just send off 100 orders. I get my acknowledgements back in 5 milliseconds or something or other. That's like an incredible experience. And then still in the background, all these proofs are being run, either fraud proofs or ZK proofs. And so I have some kind of guarantees that, no malicious stuff is happening on the order book and the state transition function. So I think there are some advantages from that centralized sequencer that I think are going to be really nice for exchange UX. And then hopefully over time, models come out where we can kind of explore the base sequencer model or other more decentralized ones and see how that goes.
Yeah, I think that makes a ton of sense. And you hit the nail right on the head there. Pre-comps are by far the hardest challenge of the base sequencing model because you can't go faster than the L1 in this model without them. For Ethereum, it's tougher because those 12-second block times kind of make it impossible from a UX perspective. Now that users in general want instant what feels like instant confirmation. The interesting thing is, Solana's at 400 milliseconds, and that's a significant improvement on 12 seconds. But to your point, if you can get closer to 50 or 5, that is definitely more in the neighborhood of prime UX. On the token side of things, I'm curious how the interplay between the L2 and the token will look like. What was the role of the token within this new system?
Yeah, it's a good question. So I guess the rollup is like more a recent development. So we're still kind of iterating our thoughts around that. So something that we came out with is like, okay, we don't want this to just be like a complete governance token because I think that's kind of boring. We want a bit more to it. So at least we have some kind of staking mechanics. We have vote escrow, which we were one of, I guess, the first people to kind of do that on Solana. I think the token space, to be honest, in Solana is just so underexplored. People seem to do pretty wacky, interesting stuff on the Ethereum side and really experiment. And on Solana, you look at it, it's like everything is just SPL tokens, and it's just quite like uninspiring. So I wish people did more on that side. I see Jupe basically started going for the vote escrow model as well, and I think it's a really nice model in that you kind of have this commitment as a user to go in there and lock up and stake your tokens. You get proportional voting power. We actually do it kind of exponential. So the longer that you stake, you actually get exponentially increasing voting power, which is really nice. So as much as we can push people in the direction of being long-term, that's really important. So not only does it have governance properties, it also has these kind of incentive properties. So for the people that actually want to benefit from protocol incentives, we give out a bunch of protocol incentives. It's going to be 30% basically over the next couple of years. So a third of all tokens that are going to come out are just going to come from people trading on our platform, and they basically build up this token and almost this like pseudo equity in the platform, in that they have governance rights and they can kind of be more involved in the platform. So hopefully that starts this virtuous cycle where people trade more, people accumulate more, people stake more, people can actually get involved in governance and some of the say in the protocol. So that was kind of on the app layer. We came up with that and we're like, this is cool and it seems like a good model. Now we've got this roll up, and so we're kind of thinking around how to use that. I think there's definitely going to be important stuff now that we're basically running our own app chain, obviously in the kind of how we incentivize, I guess, proving is probably going to be a big one. So all this ZK proving stuff is very expensive. You got to have people running it. There's a big cost to it. So I think part of that will be subsidized. If not a large part of that will be subsidized by our own token, which is kind of nice. And that gives it kind of chain and infra level utility, which I think is really good. So that's a big one. The other thing which we're kind of debating is what do we do with gas fees on the chain? We would like to ideally just abstract it from people, which would be really good. But then potentially there's some kind of utility for the token in there. So we gotta think about that, as well as sequence of revenue, other things like that, how we deal with the gas fees on the chain. So I don't want to give a firm answer because we're still ideating and thinking through this process. But I think it's really nice that you go from purely a governance token or something that's like a bit vanilla to now having a lot more properties that we can kind of tinker around with.
My friends, big news. Blockworks is hosting Permissionless 3 in Salt Lake City this year, so we're heading west for 3 days starting October 9th. Permissionless is our industry's premier DeFi event that brings together crypto natives from all over the globe. I've personally been the last 2 years and can honestly say that the attendees are incredible. It's people who actually care about crypto. We'll also have more than 200 industry titans speaking at the event, and this includes builders like Lucas Bruder from Jito Labs and Brian Pellegrino from Layer Zero, or investors like Kyle Samani and Joe McCann, and even elected officials like Representative Tom Emmer, who is fighting the good fight in Washington. And it's narrative season, so we're going to be covering the 7 hottest themes in crypto. This includes things like modularity and restaking, or Bitcoin and L2s, and even AI and crypto. The goal is to keep you up to speed on major developments in the industry. Ticket prices will be structurally increasing over time, so get your ticket today. For my Lightspeed family, I got you. We're going to use code Lightspeed10 in all caps, no space, for 10% off your ticket. All right, everyone. I look forward to seeing you at Permissionless 3, and let's get back to the show. Yeah, no, considering it's still very much in development, it's awesome to see that you guys are thinking in like multiple different facets of how we can employ this token, basically. On the gas token one specifically, how do you think about the trade-off there between, yes, it's like great utility, but also now I'm requiring a user to have this token they may or may not want if they're like, because you can imagine a world where you have a power user that like loves trading on Zeta, but is like, yeah, like I don't trade governance tokens, I don't hold them, or yada yada, whatever reason they don't want to hold the token. So how do you think about the push and pull there of like requiring a user to have to pay for the transaction fees with this token?
Yeah, it's a good question. I think the way I'm coming at it from is UX is the most important thing. And I think it's all too common that protocols just kind of shoehorn a token or something like that into a protocol that just doesn't need to exist, essentially. And I think, yeah, from our perspective, as much as I can abstract away gas fees, like basically my grand vision for how to build this thing is we're going to have people, they should be able to like sign up, use something like TipLink, where essentially they just get a wallet provision for them, or they just sign in via Google or Twitter or whatever it might be. So you have a wallet straight away. It's kind of like built into the app, and you can obviously take it to other apps as well. We would have a decentralized on-ramp in there, so people could kind of just bridge funds straight away, and then you should be able to sign for transactions and kind of have the gas fee abstract in the background. Either it's kind of paid for you, or we just subsidize the whole thing ourselves, which is like entirely reasonable. And then that thing starts actually feeling like what we are used to in centralized exchange UX. You don't have to sign stuff all the time. You don't have to worry about, do I have enough Sol in my wallet? How do I get my money in there? I think that's like another big reason why people use centralized exchange. It's just like a bridge / like fiat rails. And I think those are like a few different unlocks that if we can kind of nail those, I think that's going to be a massive boost in terms of UX and actually getting people to use Onchain, which I think is a massive blocker right now. Like I've talked with a bunch of my friends, and it was funny. I hung out with one of them, and he had crypto charts up on his laptop, while we were grabbing a beer or something like that. I'm like, oh shit, you trade crypto. How about you try out our exchange? And it just really clicked for me how painful it was, because he goes on the exchange website and he's like, how do I get started? I'm like, okay, you need a Phantom wallet. Go download this thing from like the Google Play Store, the Chrome extension store. Downloads it, and then he's like, what do? I have to do all the seed phrase stuff, set it up, yada yada. And then he gets it set up. And he's like, okay, what do I do? Can I connect now? I'm like, no, you need gas fees. You need Solana. So you probably need to go to a centralized exchange and bridge it there. Or I can just send it to you from my wallet, which is kind of painful. Not many people would have that option. And then finally he gets that. And then finally he can make the account, finally trade. And I'm like, wow, we went through like 10 to 15 minutes probably of getting your account set up with like multiple hoops. I was just like, this ain't it. Like we gotta improve on this a lot.
The wallet side stuff specifically is a huge challenge. And when you think about launching your own chain, how do you think about that aspect specifically, right? Like even like, I guess I'd broaden that to the scope of like all, necessary chain infra, right? Like you're going to need Oracle providers. You're not going to have the centralized exchange bridge. Those are quite challenging to get. So you got to like route through Solana, which is probably okay. But there's that piece as well. And then like the wallet provider as well. I got to work with them, get them onboarded and integrated. Like how has that experience been?
Yeah, so we're still yet to fully come to that. The good thing is because we're working with Sovereign, their goal is to basically abstract a lot of that stuff away or kind of bundle it in the box. You just basically come, you're app chain dev, and you come and build your exchange logic, your business logic. And then a lot of the other stuff just is kind of like standardized and templatized and comes out of the box. So what we're working with them on is at the moment just prototyping it on like a MetaMask snap. We have like a lot more just say in how that works. Unfortunately, for kind of some of the bigger wallets like Phantom, it is like closed source, so there's really nothing we can do. And I will hopefully talk to their team and figure out if they can support stuff like this. We're already talking with the backpack team, which is great. Like Armani actually reached out and he's like, hey, heard you guys are building this L2. I want to support, different RPC networks and different chains and stuff like that. So we're actively talking to them to kind of support that functionality. But at the moment, yeah, we're going to see if we can get like a snap working out of the box and then see if that suffices. In terms of the bridging stuff, I think we have a nice solution there just for like a trust minimized bridge, which we can kind of build. So that should basically just take the stuff in from Solana and be able to like credit up to the roll up. So I don't think we have to do too much heavy lifting, which will be good there. The nice thing is if we can kind of get the ZK stuff working pretty well, also our withdrawal time will be pretty competitive and a lot better than optimistic rollups, which I'm pretty excited by. And I think just the fact that you also have much faster block times on Solana means that we should be probably more faster than some of these comparable Ethereum L2s. And then other things like, block explorers and probably a bunch of other things where we're probably just going to build something very basic just to get it out there as an MVP. But those things I think are all kind of achievable. I think the stuff that's like way harder is, bootstrap your own validator set and set up like a grants program and subsidize all these things and get people to run nodes. Like that stuff will be really hard. And I'm thankful that we're probably not building on Cosmos where we just have to like do all this ourselves. Like DYDX is probably going through that pain right now. So at least we don't have that as like the main thing we have to worry about. We're mainly worried about how do we build this order book extremely fast in Rust, optimize the shit out of it. And then, we have a few little infrastructure pieces and kind of UX things that we have to tackle, but I think it's all very much within the realms of possibility.
Love the focus on product. There's just no doubt about that. On the token side as well, airdrops are all the rage for better or for worse right now. I know you guys recently did your allocation and just even hearing, just being on Twitter, you see all of the ZK scam for ZK Sync and all of the hate towards Layer 0. And quite honestly, those are probably the two most heavily cybled protocols in crypto history. So just curious how that whole experience of like going through who deserves the tokens and like what are the users I'm trying to target, how like when you find cybles, how do you deal with them, and kind of walk us through what that process was like for you.
Yeah, it's tough and it's more of a art than a science, I would say. Like no one's really cracked it. I think it's a very hard problem. So I guess this leads nicely into the fact I literally wrote a tweet about this a couple of days ago, which blew up quite a lot, got like 150K impressions or something, which is cool. But it was like a screen cap of like what Kobe was saying, which is essentially like airdrops are dead. Everyone's kind of expecting this free money, and I don't know, like the meta has completely changed. Like you said, Layer 0, ZK kind of seem like they're the end of the road, and everyone's like, it's negative EV, right? To do an airdrop, it's like you go out there, if you kind of I guess don't target enough people, or you're too harsh on the criteria, everyone feels like they get left out. Everyone starts calling you a scam. It's just like a very difficult game to play. So that kind of worried me. I spent definitely a couple of weeks and like late nights trying to figure out our airdrop stuff. Honestly, I'd rather spend my time on like product and actually building the exchange, but I figured, hey, there's quite a big thing. We're giving away, 8% of our supply essentially to this thing. So I want to get it right. And my background's more in data science and analytics and stuff like that. So I really wanted to like geek out on this and do like a good job instead of just rushing it and just calling it a day, which I think some protocols just very YOLO on it. So the way we kind of approached it is we're more of an active trading protocol. So I approach it as there is some level of effort that you have to put into using the protocol, right? Like the tough thing with some of these passive protocols is like it's a TVL game. You just chuck your money in. Okay, there's maybe a little bit of like counterparty smart contract risk, but largely like people just chuck, I don't know, like some massive amount of money in. They just like farm it for a period of time. They just like withdraw their funds, move on to the next thing. And I feel like that's kind of a problem with these kind of like deposit withdraw TVL games is like they get farmed super, super hard and people are very, very mercenary. It's kind of hard. So with ours, it's a little bit different. It's capital at risk. People actually have to trade. It requires quite a bit of like active behavior. So that was the nice thing that I kind of built this feature setup where I can kind of see people's trading patterns, activity. We even modeled our Z-score, which is our point system essentially based on volume and stuff like that. So we wanted people to like come in, actually pay some small amount of trading fees, which is kind of like almost, I guess, an investment in the platform, helps our bottom line, obviously, and that's part of the protocol. And then my thesis behind that was like, okay, people have invested this time, energy, capital, and I wanted to make sure that everyone kind of gets good on that, right, and gets everything back. So I very much modeled the airdrop, making sure that that was kind of the cost function. And then when the numbers came out, I think based on at least like pre-market prices, most people are getting like at least 5x back on their airdrop in terms of their fees, which is really nice. So no one's losing money. I think that's always the worst experience. You spend all this time farming something. You know, some people probably with layer zero, they're like, man, I did 300 bridges on this, and you gave me like a $19 airdrop or something. Other people are like pretty salty. So I made sure that like, okay, there's no kind of like free lunch here. Like people have got to do stuff, but if they come in there and they do stuff and they're not lazy, like we're going to make it very much worth their time and they get a super handsome reward. So that was one bit, is just like, what do you incentivize? It's kind of real activity, not just like bullshit stuff that you can run bots that, you know, do NFT stuff or send a bunch of transactions around. This kind of like vaporware and doesn't actually like help the protocol. So that was one. And then the other thing is just like thinking about who's actually your long-term customers. And obviously a lot of people complain about Sybils and people who are mercenary farmers. So the nice thing is because we did a linear airdrop that actually clears out, I think, a lot of those people who are expecting tiered stuff and like, hey, I put in $1 into this protocol and I do it over 1,000 wallets and then each one gets like a, you know, $1,000 airdrop. And, you know, I think people had that latent expectation from the Jito airdrop, which is a bit unfortunate. And so for us, yeah, linear airdrop, I think, solved a lot of those concerns. And then we also did kind of like a minimum cap. So anyone who didn't do $500 of volume, which is like a very simple criterion, it's like, you can't even do that, you know, which is like 0.5% of fees, $500, like, you know, it's like $100 in your account, you know, traded 5 times over, you know, a period of 6 months that we had this program. Like, come on, at least you can do that. And so it was a good like 25% of users in our category that just like hadn't even hit that milestone. And I'm like, okay, these guys are probably like 50% Sybil, or they're just like some guy who's just never going to use our protocol long term, or is just not going to move the needle. So I was just like, safely, I can cut them. I don't think they're going to be too salty because they really didn't try on this thing. So that was one. So all these things I think helped. And then the last one was actually doing some active Sybil analysis. So going through, doing a bunch of plotting. I won't actually explain how it worked because then I think that would kind of show my cards. But yeah, we worked with Helium as well, who are a bunch of super talented data science guys. They really know their stuff. Just being able to look through patterns of behavior, a bunch of different things, like model it out. There are some really obvious things that people do that can kind of like screen for. And I didn't want to go down the route of, I think some other protocols like Drift and stuff really tried to target Sybils. And I think they hit a lot of people that were actually genuine users. And I was kind of scared of that. I was like, oh, I saw like how much that kind of blew up for them. A lot of people like really bitter. They're like, I've been using this protocol for 2 years. And you marked me as a Sybil and now I got no allocation. That's just like a customer support nightmare waiting to happen with like 1,000 tickets in your Discord and just like manually resolving. So yeah, we tried to do something that was like fairly high signal. And I think we did a pretty good job where we just caught the super egregious guys that had just spun up like absolutely thousands of wallets. And I don't want to be giving those guys an allocation because they're trying to cheat the game. They're cheating the real users out of stuff. You know, they're trying to game the mechanisms. And I think we really did a good job of bringing that down. And I was glad to see all the real people in our Telegram chat when we put out the airdrop checker. They're like, man, I got a fat airdrop. I got like 50,000 tokens, 70,000 tokens, you know, all this kind of stuff. I'm like, that's great. This guy's been around for like 2 years. He's been in our chat all the time. This guy trades like a shit ton. And this guy got like a fat airdrop from it. And he was just like cheering about it. So just kind of seeing that feedback, I'm like, okay, I feel like we put in the effort and people kind of appreciate it. And it seems to have like paid off. So I think my general read on that is like airdrops definitely have a lot of flaws. And I think there's a good way to do them and probably a not so good way to do them. So they require quite a lot of effort. And I think you've got to be really careful and considerate. And we'll see how the meta evolves. I don't know. It seems a bit overplayed, but yeah, we'll see.
Yeah, it does seem overplayed, but like it's hard to launch a token without one, right? Because, you know, low float, high FDV tokens are like, you know, those are also sort of in the meta or certainly have the gun to their head in a lot of ways. And there's not like that many ways to get around that problem, right? You can either like unlock the team earlier, which generally isn't the goal, or you can airdrop more tokens, which is kind of, you know, I don't really think that achieves the goal either. Of course, like the people, aggressively farming these things, that is exactly what they want. But I don't know. The industry has hit a really, really weird spot with this, where people like feel entitled to their airdrops because they like took a bet and like either failed to see it's a bet or just like want to be obnoxious and ignore that fact. So I don't know. But I liked how you mentioned you get the benefit of kind of being an active use. You can like target active use versus these TVL protocols. I saw a crazy stat the other day. Granted, I just read this passingly in a tweet, so if this is wrong, don't come after me. But their AO computer is like spinning out of the Arweave ecosystem and is launching a token. You can farm it with staked ETH. And they have like some crazy, like let's say 250 million of TVL, and someone ran the number of depositors, and it was like 1,000 wallets. So the average deposit size then is like 250K, which to me looks a lot like somebody just attacking the shit out of that. A very well capitalized individual. So I don't know. It is kind of weird to see that push and pull there between how do you target that active use. But for a protocol like Zeta, there is like that one specific thing is like trading. So it kind of makes it easier. And speaking of that, when you look out forward, do you just want to continue optimizing the shit out of how you trade on this platform? Or do you kind of think an expansion or additional product offering is kind of within reach? You started with options, ended up pivoting to perps. Curious where you think you'll go in like a 6 to 12 month time frame.
Yeah, it's a good question. So I think for now, one of the big learnings I've had is just focus is so important as like a founder and a business. I think what we made the mistake of in the early days was trying to do too much. So we tried to do options. We did these kind of DeFi options vaults as well, which were very hot at the time. We tried to build a bunch of different products. And I don't think we built any of them like particularly well, where I was just like incredibly proud of what we built. And then the great thing in the bear market is it just kind of, it kind of killed everything. It's just like, okay, this is not panning out. This doesn't have product market fit. This other one, just like it's just impossible. And so you narrow down your focus to the one core thing that's actually going to drive revenue for your business and actually that is sticky and has users. And we're like, okay, the linear stuff, perps and futures seems like people kind of know how to trade it. It's a lot more simple for us to build. We can build it, in a much better way. Let's just put our resources behind that. Let's make the front end really good and bug free. Let's optimize the smart contract. Let's just like go through and talk to a bunch of customers, which for some reason we didn't do in the very early days, which is I think a lot of crypto teams don't do for some reason. And we just went through and we just fixed a lot of small things that don't seem massive on the surface, but were just kind of really important to have like a unified user experience. And not to say our current platform is perfect, but I think it's like 10 times better than it used to be, which is really nice. And we started seeing like people actually giving good feedback at that point. They're like, okay, I might actually consider using this as like my primary trading venue because it actually kind of meets this minimum bar of, I guess, like acceptability there. And so focusing more on that UX, on that performance, making it like a really good exchange. We're only like a 15-person team, so we only have like so much bandwidth to do. So we really focused it in on the perps product, and I think tried to deliver something that was definitely like pretty good there. And so going forwards, I guess we're continuing to focus on the perp stuff. Obviously, a bit more on the infrastructure side, just to like speed it up. That's just been the main difficulty for us. Is like our front end's good. We got all the different features. The exchange works. We've got order books. We've got graphs. All the basic stuff that you want to exchange. We've got point systems, referrals. Everything that like is in the exchange playbook. But now it's just making things faster, better, more liquidity, all this kind of stuff. So once we're really happy with that, which will probably be end of year if all things go well. Then I think it's a good time to start expanding the offering. So some really obvious ones that everyone's been yelling at us for is multi-collateral. So just being able to use Sol, Jito Sol, MSol kind of collateral, I think is like a no-brainer. It's like these coin margin futures that you see on Binance. It's really nice. I don't have to be holding stables to be able to like long a perp or something like that. People can just be like super long Sol and also go long the derivative, which is really nice. A lot of those designs require basically lending markets under the hood. And that's just like such a no-brainer synergy, in our opinion, is like the kind of money markets working alongside the perp stuff is really good. You can kind of unlock a lot of stuff. So it's like native yield essentially on your platform, which is really good. And that'll be really good on our chain, obviously, if we can just kind of support stuff where it's like your deposits and your collateral are just kind of earning all the time. That's a really nice reason for people not to like breach out of the platform and put their money elsewhere. So really excited to build that one. By having the multi-collateral stuff, it also enables stuff like basis trading. You can kind of short the perp and still be kind of long the spot and not get liquidated. And so the funding arbitrage is really good there. And that's basically the basis of Athena and all these other protocols. Is it's like a stable coin that earns a ton of yield just because funding rates tend to be super high in crypto perps. So those are really nice. I think eventually it'd be really nice to support spot. There is some difficulty there, I guess, in that on a roll up, we won't have, I guess, atomic composability with Jupe. So I don't know how to approach that yet, but I'm thinking around like creative ways and things we can support. So I think it's still going to be particularly on the derivative side for now, but would like to expand the product offering past that. But that's kind of like a next year thing.
Nice, man. That's exciting to hear as well. And when you were thinking about the roll up or the L2, you had a long history building on Solana, so it kind of seems like a natural thing of just like the progression of what you were doing. But I'm curious if you considered any other chains, Ethereum being the most obvious one, or even some of these other like newer, higher throughput chains, like let's call it a Sui or an Aptos. Were those ever like in the question for you, or how'd that decision go?
Yeah, so it's funny, before we actually started on Solana, I think we talked to the Arbitrum team like pre-launch and stuff, and I was like pretty interested in their stuff. They were obviously a little bit far from mainnet at that point, and then kind of looked into more of these roll-ups. I guess actually went to ETH Denver in 2023, like during the bear market. It was kind of funny. Like Solana was just like at absolute rock bottom, and a lot of people were just kind of like felt sorry for me. But I was just kind of like seeing what was out there. Not that we were necessarily going to switch chains or anything, but I was like, I should probably like broaden my focus and just kind of understand what was out there. Read into a lot of this roll-up stuff, and I think even then, I think some of the ETH rollups had some kind of limitations, and even some of the kind of DA costs and other things were quite expensive. But we were kind of seeing that for an order book, it kind of makes sense to run some of that computation off chain. So I can kind of definitely see the merits. So we looked into a bunch of these things, especially like app chains, roll up as a service. Things like, even like on the Cosmos side, we do like a full blown isolated app chain like DYDX has been doing. I think that was like a gargantuan undertaking, especially having to run your own validator set. I think I was just like, okay, we probably need like twice the team size and a lot bigger treasury to be able to pull that off. And then we did look briefly into, I guess, these other kind of alternative L1s, Aptos, Sui. I think the thing that I noticed there is like, yeah, they've definitely got some pretty interesting stuff and like new consensus mechanisms and ways of doing things, but largely, and maybe I'm wrong on this, but like they felt like, I guess, a marginal improvement on the Solana stuff. Like Aptos just feels like, oh, we took DM stuff. It's like Solana, mildly faster. Same with like Say. I think we talked to them for a long time. I do like their founders and their team, but it was like 390 millisecond block times versus like 400 millisecond block times. I'm like, I don't know if I want to like rewrite my entire exchange just to like shave off this like marginal difference there. And a lot of them were really focused on, or I guess a lot of the new chains are focused on like EVM compatibility and bytecode compatibility. And I'm like, I don't care because I'm not a Solidity dev. So it's like just not important to me. I'm like, just give it to me in Rust and we'll just kind of like build it from there. I think Sui is definitely interesting. They seem to have this like DAG model where you can do a bunch of stuff kind of in parallel or kind of asynchronously, which seems pretty cool. I think when I talked to the team or read through their docs a bunch though, is when you're trying to do very complicated kind of DeFi where it's locking state, you don't actually get to tap into their kind of main engine that parallelizes or speeds things up a ton. So it seemed like for very complicated DeFi apps, you kind of fall back to full consensus, and in which case it's like not that much faster. So I think there are a lot of like interesting things coming out. Nothing that really blew my mind was like, this is 10x better than Solana. So we basically made the decision, like, I don't think it makes sense to switch. And thank God we did. We stayed on Solana. It's been working really well. And I like that it's battle hardened as well. It's not this new thing that's just popped out of nowhere that's had like no testing strain. Like we've been on it since 2021. We've been through the Radium IDOs and the NFT mints that brought down the chain. Like those are the things that battle harden the thing that make it actually usable for DeFi. So that's why it's been good to use now. And I think being able to build on top of that is great. We leverage all the scalability, hardware, performance upgrades that happen there, and then we get to kind of own the execution environment. And the even better thing is, and if Mo was here to comment, it would be great because like all the ZK stuff that's happening on Solana is also very exciting. It's like a ZK juggernaut. There's things coming out. There's like state compression and kind of just a general like amount of syscalls and other things that are being implemented on the ZK side that we'll be able to leverage out of the box. So I'm pretty excited by that as well.
We're recording an episode with Swen and Mert in about 3 or 4 days. So
perfect.
That's really confusing for when this episode will come out. I really don't actually know at the moment, but yeah, it'll be fun. Like, you're completely right. There's been so much innovation happening on Solana. Firedancer is obviously the headliner, but if you like start peeling back the layers, it just keeps you like, it's like a book that never ends. It feels like, even with the most recent one was that blew my mind was Mithril, which like the overclock team is building out this full node basically for Solana, which has always been the biggest knock is like, yeah, it's cool, but it'll never be sufficiently decentralized because it's only run in data centers. It's kind of cool to see a new iteration of that from the node perspective. And I guess as a closing question here, Tristan, you're incredibly thorough, and that last answer really proves that. But what advice would you give to upcoming crypto founders that are looking to break into the DeFi space?
That's a really good question. There's been a lot of learnings. I think the thing that you have to just do is get stuck in. I think that's what I see a lot of new founders kind of struggling with, is they're like 1 foot in, 1 foot out. A lot of people who are probably like listening to the podcast and they're still kind of working their job like I was when I started. I'm like, hey, this is a cool thing. I'm going to dabble on some smart contracts. And you can kind of read all the blogs, all the tweets that you want, but it's only once you start actually maybe writing the code, or if you're kind of non-technical, just like going and actually building stuff and getting it out there and acquiring users. So I think just, pushing through, taking that leap of faith is really important. I mean, I came into this as like my first time founding something or other. I think I've learned an incredible amount in the last 3 years. That's not to say I haven't made a huge amount of mistakes and learnings. That's been really good. I think the cool thing for me in the crypto space is, I wouldn't say no one's an expert, but like the guys who are like the grandfathers of crypto, the Tollies and the Vitaliks, like they've probably only been building in crypto for 10 years or something like that. Things have not been around for that long. Even for us, it's weird that I get invited on stage at all these conferences and stuff, and I've only been building in the space for 3 years, and we've already managed to build a platform that is basically on the cutting edge and is in like the top 10 perps platforms like globally. So I think there's just like a lot of upside, a lot of opportunity. And yeah, I think being able to like put your heads down, ship, not worry too much about market prices and what's happening, and focus on the technology and get stuck in is super exciting.
That's awesome. That's awesome. Well, Tristan, this has been a fantastic discussion. Anything you want to leave the audience with?
We'd love for anyone to just jump on the platform, tag me on Twitter with any kind of complaints or feedback so we can improve things and make the killer exchange platform.
Tristan, thanks a ton for coming on, man. This was a fantastic discussion, and wish you all the best.
Appreciate it. Thanks for having me.